Hey everybody, how's it going today? I just want to do a video on the recent position I took in Workhorse Group Incorporated, ticker symbol WKHS, and I also want to talk about the bubble I see forming in the electric vehicle space. These stocks are absolutely on fire, and most of them are up for no particular reason except for the fact they are in this space, which can pretty much be attributed to Tesla. But with this huge spike in volatility these stocks are having, this also creates big opportunities. So in this video, I'm going to go over the EV stocks that I'm watching and what my plan is. Okay, first off, I just want to say this is not trading advice. It's only my opinion and my potential plan for trading these stocks. If the environment changes, this plan might get thrown out the window, so please do your own research and make your own trading decisions. I also only plan on swing trading these stocks, so if you plan on holding these for the long term, you need to do a lot more research so you fully understand their business. If I do decide to trade any of these other stocks, I'm planning on holding them for between a couple of days to a couple of weeks tops. So there's no need for me to dive too deep into the business because I'm trading strictly on the charts alone. Okay, I'll start with Workhorse Group because that's the one I've seen the most questions on, and it's also the one that I have a position in right now. And they're actually a very interesting company, and at the moment they're one of the most heavily purchased stocks on Robinhood. Now they're trying to capitalize on the last delivery EV segment, which from what I've seen in my limited research, that area isn't being targeted by many EV companies. So they have the potential to dominate that niche and have customers such as FedEx, UPS, and more. They're also in the running for a multi-billion-dollar contract with the U.S. Postal Service, but I wouldn't hold my breath on that because, number one, they might not get the contract, and number two, the post office is in financial despair, so it wouldn't surprise me if they scrap the project, at least temporarily or maybe even altogether. Nonetheless, Workhorse is still an interesting company and worth keeping an eye on, so I'm going to leave it on my watch list and follow its progress into the future. Okay, so now let's get to the chart. As you can see, this run-up has been insane to say the least, but this move is absolutely not sustainable and will have to be coming back down to earth eventually. By the way, if any of you got into this stock before it took off, let me know in the comments what price you got in and what your plan is going forward. This move up last week has all the characteristics of a climax run and should be just about out of steam. Now, there's always a chance the stock could turn back up and continue its uptrend, but odds favor this move up, at least in the short term, has about run its course. Now, what I like to do with bubble stocks like these is buy a few out-of-the-money put options because it limits my risk rather than shorting the stock. Now, I only bought a few put options because this stock does have the potential to run back up, so I want to keep my potential losses small. Now, I like to use daily charts when I'm screening for these bubble-type stocks, but when I look to trade them coming down, I need to look at an intraday chart for the entry point because these stocks are moving way too fast at the end of these moves to use a daily trigger signal. By then, most of the move could be over once it signals to the daily chart. Now, what I normally do is look for a trend line on the 15-minute chart and wait for price to break it to the downside like you see here. Now, when I first started trading these types of move, I tried using the 5-minute charts to look for the earliest trend line break because I wanted to capture as much of the move down as possible. But I got way too many false signals for my liking. In my opinion, the 15-minute trendline break is the best because, like I said before, the 5-minute trendline break has too many false signals, and the 30-minute or greater trendline break sometimes doesn't have a lot of the move left to keep the risk-reward ratio in my favor. Now, soon after the trendline broke, I bought a few out-of-the-money puts when price was about $18. I decided to buy the 1750 July 17th contract, and I paid $2.50 for each one of them. Now, these only have 11 days left, so I don't know why the premium is so high, but what can you do, right? And by the way, if you're not familiar with all this option lingo, you can either Google these terms, or you could just look up like a basic options video on YouTube so you can understand them better. But I just wanted to focus on the strategy for now so you could use it in the future rather than make a super long, drawn-out video explaining every single term. Now, like I said before, there's only 11 days left, so one big update could easily cut this premium in half, so I never go too heavy with these types of trades. But the risk-to-reward ratio is usually quite favorable, so there's really no need to go that heavy. The first decent level of support I see is the $10 area, so if it falls that far pretty quickly, then this is easily a triple or more. Now, this strategy takes a little time to get comfortable with, so you should practice it with paper trades before you jump in with real money. But these movements happen all the time in the market, so this strategy is definitely one worth learning and getting good at. Now, I normally don't recommend options, but this is one of the few strategies where I implement them. And I know options are heavily marketed, especially to newer traders. But trust me, if you don't know what you're doing with options, they are the fastest way to lose your money. So before you jump into options, you need to practice with simulated trading and get super comfortable with them. Okay, before I end the video, I just wanted to share with you a few more stocks I have on my watch list that are in this sector that are looking very bubbly as well. The first one is Arcimoto, or FUV. Now, FUV currently doesn't have options, but could possibly be shorted depending on your broker. And this one should definitely be coming back down to earth real soon. Another one I've been watching is KNDI. Now, this is a Chinese company, and as you can see, it's been a little late to this bubble party, but that's probably because the information out of China is a little sketchy, so people are a little hesitant to buy Chinese stocks. But don't be surprised if this one takes off even higher real soon. Another one I'm watching is NIO. Now, this chart is particularly painful to look at because I was super close to buying some back in November for around $2 a share, but for some reason I never did. Then it fell off my radar until a few weeks ago. But, yeah, that would have been a decent buy. But anyway, this is probably my second favorite one to come crashing down soon, so I might take a put option position in this one as well. And if I do, I'll let you know in a video. The last one I'm watching is Solo. Now, just like KNDI, Solo might have a little farther to run up, so this one is still on my watch list for now, but one or two more big up days, and I might have to take a position in this one as well. Okay, guys, so those are my thoughts on Workhorse and a few other stocks to watch that are riding this Tesla EV bubble. And like I said before, if I decide to take a position in any of these, I'll put out a video and let you know about it, as well as let you know if I see anything else interesting happening in the market that we can take advantage of. So subscribe if you haven't already so you don't miss it. And please give this video a thumbs up. If you see any other bubbly stocks, please let me know about them in the comments sections. I'd love to check them out. Thank you so much for watching all the way to the end, and until next time, take care, everybody.